So we're going to go ahead and get started. We'll have people joining throughout the call, but we have a very jam-filled agenda today. So we are going to talk faster than usual, if that's possible. So we want to thank our sponsors, Digital Wave and Intel, and today we have Invent with us, and you'll get to meet a new friend of Coresight's, and we're excited to introduce the team to you. So as we look at kind of, where we've been, for those of you who are new joining us today, this is a confidential space. Nothing leaves it unless you ask the person who's speaking. We can take out themes, but no specifics. So we do take that very seriously. So thank you for being part of the community and for adhering to that. So we're going to have what we usually we have one of these. We have 3 different topics today. So we're going to do a quick recap of our Legends of Commerce event. We're going to do a preview of our research trends for 25 as it relates to what we're seeing in AI. And then we have a workshop with Invent, and we also have John Jarrett joining us from Academy. And then we'll leave time, hopefully more than a few minutes, for Q&A. And, as typical, please raise your hand, jump in. If you have any comments, we'll get to as much of this as we can. So if we look ahead at what we're seeing for, this is really just even the first few weeks of 2025. Our team will be at CES. I'm leading the High Tech Retailing Summit there. And we actually, Maria from Intel will be joining me. That is a really amazing event. And then there are several other pieces of CES that we're involved in. That leads right into this year. This is always fun when it leads right into NRF. So we'll kick things off on Friday evening with the VIP awards. Coresight's been nominated. And then we will move right into we have several dinners that we're part of. So on Sunday night, we have a dinner with Board. We also will be on stage with Invent and with Tailored Brands. And we have a dinner as well with One Door. And then we kick things really off for kind of the finale with our event at Tapestry. And so we're excited to have you there. And then we'll be having a conversation with Board as well. So as we look ahead and kind of review what's been, kind of part of our event series, I will turn it over to Coresight's John Harmon to speak about our recent conference on December 3rd that we hosted at Wunderkind at One World Trade Center. John, take it away.
Thank you, Deborah. Good morning, everyone. Hi, everyone. As Deborah mentioned, we hosted rough estimate about 100 people at the Wunderkind offices on the 74th floor of the World Trade Center. Spectacular views. We put on the event in cooperation with Ken Pilot Ventures and hosted several keynotes and several panelist discussions. The featured keynote speakers were Joe Preston, President and CEO of New Balance, who talked about the evolution of his company, that it needed to get younger and connect with young people. And these days, the company does that by focusing on sports, music, entertainment. And he also talked about the company's substantial business in China, where they have 2,000 stores and little competition from other athletic wear researchers. The other keynote speaker was Todd Snyder, the creative director at Woolrich Black Label. He started his career at J.Crew, where menswear was not a big focus there, but succeeded there through curation. And his brand was acquired by American Eagle in 2015, currently operates 19 stores. He credits his success to 3 C's: collection, collaboration, and curation. And they focus on offering the New Balance line, but a very curated product assortment. And moving on to the slides from the panel discussions. The panel discussion was on responsible AI with representatives from Tractor Supply, Wayfair, and Digital Wave. One of the speakers gave a really great definition of responsible AI, which is not hallucinating, which is certainly, a great start for responsible AI. Then we had a panel discussion on search. As we know, historically, search has been very keyword based, which leaves it not very flexible and not very understanding of cultural trends. But using generative AI, search can be more flexible. So if you're looking for the dress that Beyonce wore last Tuesday, generative AI can dynamically keep track of a lot of cultural references and be much more flexible, much more accurate than standard keyword-based search. Moving on, we had a panel on the panels for search were Lily AI and Simulate. Moving on to in-store technology, we had two panels from Radar and Crave Retail. Radar offers an item tracking product, and Crave Retail focuses on monitoring what happens to inventory in the fitting room. And monitoring inventory is especially valuable. We talk a lot about inventory accuracy, but you can see what people buy, what they don't buy, and really, sell down to the last item and make sure you can find it in the stores to actually sell it to a customer. And as I mentioned before, generative AI has different shopping habits. They're more dynamic. The trends change faster, and generative AI is a great technology for adapting dynamically to those trends. And then finally, just a bit of technology on AI models. One of the panelists coined a phrase called ambient data. In our research, we call this external data. So demand forecasting gets more accurate when you bring in external data, such as the weather and the local calendar, and these trends really affect demand. And bringing in this data, which is free, can dramatically increase the accuracy of demand forecasting models. And that's what I have to say about the Legends of Commerce conference.
Thanks, John. So we're going to roll out today's speakers. So myself, we're very honored to have John Jarrett, who's spent his entire career at Academy, which that is very rare and says a lot about the organization. And then we'll have Gurhan talk about one of my favorite topics is hedge fund math. So I'm really excited for that discussion. And I will keep my comments as brief as possible because I really want to leave time for our special guests. So we have an in-depth report. We're going to launch it at NRF on the 10 trends in AI for 2025. Today, we're just going to go through 5 of these. And I guess it was in October, I had a surprise trip to Dubai, and we kind of built this core framework that has really been this foundation of everything we've done in terms of our conversation around AI. And it was interesting. The event I was speaking at, most of the people had really been preparing for almost a year. I had about 3 weeks. And it was really interesting because they had almost like a trainer for us. And he was like, I had actually originally had kind of all of these 5 pretty equal. And he said, to me, it seems like sustainability is truly the kind of foundation, or all of these other pieces really do attribute to that. And if you think about it, right, we save time, we save money, we save resources, we have more time to develop our resources. And so truly, if we look at it, it really does change a lot. And one of my favorite people and a true mentor to me, Richard Galanti, always said, and I was just out in Seattle with him recently, the now former CFO of Costco, he's like, sustainability rhymes with profitability. Well, it doesn't exactly rhyme, but I think it brings across a really good point. And so if we look at the next slide, I'm really excited and also would love feedback on this. And ultimately, if we think about where we are in terms of new businesses, and also looking at what matters in number 1, well, I guess in the C, this idea around creating new businesses, we're seeing retail media, retail as a service, data monetization, and it really starts to change the trajectory for retailers. And I've been saying this is kind of the year to go long retail, because I find like these conversations, right, where we have retailers talking to each other about some of the solutions they've tried, what's worked, what hasn't. But ultimately, of course, there's competition, but everyone's instance will be different. And I think that's quite interesting. With O and optimize operations, we're not just seeing, kind of efficiency in what's done, but also in how the customer reacts, right? So this I feel that this is much more customer focused, and your customer, right, like that's the shareholder, that's your employee, and that's the person who's, you know, purchasing goods, which could be the other two as well. But I look at it as there are three customers, and I think optimizing operations really takes care of all those three. Well, reinventing the supply chain, right, is where my heart is. And with a lot of the news and, around potential tariffs in 25 and beyond, I'm finding this is kind of back in vogue. And then E around enhancing customer experiences. I think the customer expects a lot more. And this idea of kind of end to end, truly personalized experience, people are much more comfortable with. So we'll dive into a few of these. I'm going to keep my eye on the clock so that I leave enough time, because we could, as everyone knows, we could spend an entire session on one of these slides. So as we go to the next slide and think about the impact of all of this, we are looking at a significant increase from, and that's why we picked the ones that we did in CORE. We were able to tie numbers back to this, and from different retailers and it's probably at least 110% from different retailers who rolled out different aspects of CORE. They have seen, significant, but what they've done is they've reinvested this back into the business, right? And that I think is why we're seeing retail at, almost an inflection point. And, we're obviously seeing a lot of change. You've got, new competitors. We have brand aggregators, right? We just saw WHP Global acquired or announced the acquisition of Vera Wang yesterday, right? We're seeing a lot of change in the retail world, unprecedented, in fact. But we're also seeing, companies like Walmart who are really turning almost more into tech companies, and they're able to monetize, their data, their, kind of this whole retail as a service and retail media, so that they can truly change the experience, for all, kind of interested parties. And, as we think about, this kind of creating new businesses, this redefining and accelerating product development, this is something that I've probably spoken to more of you on the council about this idea. And then I think number 5, this idea that we can continue to get better, faster, and we have more feedback. So we can have feedback from synthetics, right? We can have feedback from the customer, and that we're able to change, product development, but also marketing and advertising. There's a lot that we can reiterate. And I think this idea around digital twins that we're seeing, and we expect to hear a lot about that at CES, that this ability to predict when things will break down, what things will look like on a Black Friday, we are seeing kind of companies lean more into that. And that does have a big impact on PD as well. So to me, I think many of you know I've gone through a lot of training to be an AI champion for YPO, and one of this whole idea of like train the trainers, one of the trainers who trained us, it wasn't that I hadn't thought about it, but it was the way that they put this whole idea around Gen AI together, which is it's truly democratizing, right? If it's $20 a month for a personal subscription or $30 a month, per seat for a business subscription, and some of these are even less than that. These tools, these solutions are truly available to all of us. And I think that as we look across what can be analyzed, every single aspect of the business can be. And in some ways, I think that's overwhelming for folks. And I personally think it allows us to make much better decisions, and we don't like wax and wane, which I think right. I always talk about decision fatigue. I live my life trying to figure out what decisions do I really not need to make? Can someone else make them? Or is it however the chips fall, let's let them lie there. I do think that this really does change quite a bit. And we give this example of Glean on the bottom, which you can read, but I do think this change around access and analysis, and depending on which LLM you use, right, you may get different answers, but that in and of itself, that can spark a whole higher level of thought process and analysis than we had in the past, where we were like literally like trying to add data into spreadsheets. That to me, from my own kind of, I would say, my own days, this is where I find I save the most time, and I'm able to make better decisions. And for retail, we have, I think, if I look at holiday 25, we have seen, I think in sizing, we've seen some of the biggest changes. And I would say it's not just demand forecasting, it's also the inventory allocation and then the pricing and the promotions, right? That whole kind of piece of it. But we are seeing the ability to make decisions closer to, kind of the point that the consumers are ultimately going to consume. And we are seeing a lot of changes. I mean, in stocks are better, out of stocks are better, sales growth is better. And, if you think about, right, for the consumer, right, they've done the research, they know what they want to buy, color, size, they go to the store, it's out of stock. They go online, it's out of stock, right? There's no bigger kind of, I think, point of frustration for them. And so I think that this is where we really feel we'll lean in as an industry in 25. The solutions will be there. Everyone will be more comfortable utilizing them. And this is, pretty significant in terms of dollars and cents. I think that's how I'd look at it. And then as we look at number 4, the ability to, there's a lot going on the slide and the print is very small, so apologize, but we try to fit it all in. And so, we'll hear from Invent in just, probably should have had this number 5, but we'll hear from Invent in just a minute. But this to me, allocation and replenishment, with a lot of what many of you have, let's just say, experienced in the past few years around shrink, the allocation has been even more important than in the past. And so one head of loss prevention said to me, it's part of business, but the issue is we want to make sure that it's on the shelf when the customer comes into the store. And so that is really truly a lot of the story at this point. And also making sure that if merchandise ends up in a place that it shouldn't be, that it gets kind of back to where it should be, and that employees, if they're right, we're seeing, I did a post last night on Target, right, which has been really challenged how they're using their stores as warehouses. And not only have I seen multiple customers literally get run into by these very large carts, but the out of stocks are, I mean, they were always high, but they're at a whole different level, because it's very difficult to predict, right, what people are going to order to either have delivered to their homes, that they're going to do, buy online, pick up in store. And then, right, we're seeing, right, Gen Z increasingly wants to be in store. And so there's a lot that's changing, and there's a lot that, still needs to change. So I'll conclude with this slide. The workforce technology, and there are many aspects of this. So there's giving the, this is called the sales associate, the store manager, the ability to make more decisions in real time. There's the ability for them to, like, if something is out of stock, to make a recommendation, or to have more information or intelligence, right? There's product coming, we can hold something, kind of behind the counter for you. And then a lot, like, fit is still, and we're hearing more and more in footwear actually than we are even in apparel, but fit continues. One of my friends owns a fairly good sized footwear company, and I just bumped into her literally on a plane recently. She said that returns now are over 2/3. And so if you think about the cost of the business, and and as a result, she's leaning heavily into a lot of technology, in fact, developing some of her own around fit. And so this idea that consumers can at least do a much better job before they purchase, if they're not in store, if they're not trying on, and have, right, I mean, we reverse logistics is expensive, getting product back where, the customers tried it on, et cetera. There's a lot of cost here around getting the right product to the right customer and having it fit, be the right fabrication they expect and color and all that. So there's a lot here. And I think that what we see is, kind of real change going forward. And so with that, we would like to, this is just one example of some of the, kind of companies who are part of this ecosystem. And as we move to the next slide, we want to turn it over to Gurhan. And, I just want to say at our introductory call, I probably could have spent 3 times as much time on the phone. And there's, to me, what I've always loved about retail is that there's a lot of math if you so choose to lean into it. And I think Gurhan has really done that for the benefit of the industry. So we're going to have a very quick conversation about what Invent is, and then we have Academy, John Jarrett joining us. We want to make sure that he has enough time to talk about his experience, what he's learned and what he's learning. So Gurhan, I'll turn it over to you. The floor is yours.
Hi, everyone. Thank you, Deborah, for the intro, and thanks for having us on this collaboration. We're really happy to be part of it. And I wanted to say something on your slides, but to save some time, I wanted to jump right in. So let's go. As maybe you may know, we are on the inventory optimization, forecasting, AI recommendations, agentic AI, price and promotion space. So this is some of the things that you've mentioned. And the way we think about retail is it's all about a balancing act. We want to have extremely high customer satisfaction. We don't want unhappy customers, but we want to do this with very low inventory costs without carrying an excess inventory on our books, without minimizing our inventory levels or the risk that we carry, that we offer for offering lots of different products, lots of different colors, lots of different sizes, lots of different choices, channels, and buying opportunities to the customers. And when we think about this, if you can go to the next slide, there is this let's say conflict between two types of KPIs. So the CFO wants very high terms, and the chief customer officer wants excellent service levels, high in-stock rates, very good customer satisfaction. So I've been in academia actually for about 20. I've started in academia 25 years ago, and I was in academia for 10 plus years, and I've been doing Invent for the last 10 years. What I've learned, and I've been working with retailers all this time, what I've learned is it's interesting. This conflict is very big. There's a constant battle between these two KPIs. But the way retailers have been solving this for the last 30, 40 years, and also all the commercial solutions in the market, the way they solve this is they do something with data. They may do some AI ML forecasting, but they bring everything to the table. And at the real most critical point, they turn to the planner. It may be a VP of planning. It may be a planner, depends on the size of the company, and say, okay, dear, Jim, with all your wisdom, how should we solve this balance between or the battle between the CFO and the chief customer officer? And nobody has a good answer to this. And it is interesting to me because there is actually a way to solve this problem completely and very satisfactorily by converting everything to financial domain. We can actually convert the service levels into the financial domain, because if I lose a sale because I don't have sufficient inventory, or the example that Deborah gave, if I don't have the pricing right, there is a financial opportunity cost that we lose, a margin that we lose from this decision. And obviously, carrying inventory has a dollar value associated with it. We can actually convert that to the financial domain. And in the financial domain, we can solve this problem. And it is not a single number. Surprisingly, it is not a single number. It's actually a different number for every product, every location, and every time point. So it's actually a three-dimensional space where we need to make these decisions. And instead of a single number or a couple of numbers that would be simple guidelines, we can actually come up with a different answer for every product and location, every time point. And that would be actually the financially best position that the company can take. And we have an answer to this. And Invent.ai is basically about operationalizing this idea and making it work in real large enterprise retail type of situations. John Jarrett from Academy Sports is one of our favorite customers and someone who understands this domain extremely well. And he's going to tell you about how we did it. I'm going to give you a little bit of the, let's say, what is behind the background, what is behind the scenes in this. So if you think about existing way of decision making in retail up until 5-10 years ago, is you would have a simple forecast, which may be a time series of a last year forecast, and you go ask the planners what you want to do with this. Okay, there are new systems that would utilize AI/ML forecast, but forecasting alone does not make you money, and forecasting does not make you decisions. The new AI systems, in our opinion, the way we see it, is all of those systems out there in the world, they come up with a forecast, but then they go again ask the planner. And that's where you lose all the benefit that you could actually generate through AI. And what we do is this: we have AI/ML forecasts, but we convert them into decisions. And I'm going to show you one quick slide about how we do it, like very simple idea. But this way, we could actually generate different decisions for every product and location and time and situation. Going into Christmas is different, going out of Christmas is different, going into a promotion is different, going out of a promotion is different. And this AI decisioning, we call it an AI decisioning platform, rather than just getting forecasts and asking planners again. And this makes a big difference. I'm going to show you one quick case study and one idea slide to describe what this is. And we do this idea applied to many different products. We have planning solutions, including assortment optimization. We have inventory decisions, which is replenishment for long life, allocation for short life, or buying for also, pre-season. And then we have price, promo, markdown optimization, applying all these ideas. And our goal, and we say this is a hard promise, by saying that we can deliver, and we do deliver, 4 to 10% comp growth with better terms, which means roughly 2 to 6% higher EBIT, depending on the company. And I'm going to show you one example of this. Next slide, please. I'm trying to cut it quick so that you could actually get to the more fun story from John. So we call this hedge fund math, and the reason we call it hedge fund math is because we apply the idea of financial investment theory to retail inventories. We basically characterize the financial value of moving every shippable unit in the supply chain. This may be a case pack or a single unit, from one location to another, or from one channel to the other. And we do this we generate the AI/ML forecast, but we don't stop there. We actually generate the probability of actually having those events. Because if you look at retail, most of retail is slow movers. Even in grocery, 80% of the products are slow movers. And we would have, when you look at a store location combination, you would maybe sell 0 units, maybe sell 1 unit, maybe sell 2 units, maybe sell 3 units in a week or in a day, depends on your lead time. So what we do is we generate these probabilities for every location and product. As you see here, this shows only 2 stores and 1 product, but it is actually 10,000 products and 1,000 locations. It would be tens of millions of these characterizations. And we decide on every shippable unit, if it makes sense, if it will generate more money, this could be revenue or margin, than the cost of carrying that inventory or the risk of having that inventory left over. For every shippable unit, we make this decision. So we make bets in this 3-dimensional space of products, locations, and time to optimize inventories or pricing decisions. And that's how our system works. Happy to have longer discussions if anybody is interested. And this generates a different profile. These are our customers both from, and this idea applies in fashion, it applies in apparel, it applies in various specialty retail customers, it also applies in grocery, and in all the products that I've mentioned, which is both inventory, pricing, and planning capabilities. And if you go to the next slide, I'm going to show you one quick case study and then hand it over to John. Alo Yoga, as you know, is actually the fastest growing retailer in the US for sure, maybe globally right now. And we actually did a test with them. What we did is they had a legacy system, not legacy, actually modern software, but I call that a legacy system because it only relies on forecasts and leaves the decisions to the planners. And we took 20 of their stores. Out of their 70 stores, we took 20 of their stores and run it on our systems. And we compared the revenue and margin dollars that we generate in the 20 stores, which are statistically selected, proper, scientific test, okay, across the country, and compared it with the 50 stores plus that they have on their existing system, plus the planners who know a lot about the business. And these are our results. We do this all the time, and we generated, in this case, 9.6% higher revenue, which corresponds to roughly 6.6% higher margin dollars, with actually same or a little less inventory. Same stores, the similar set of stores, same types of products, same planners, same promotions, same weather because it is all around the country. And out of $1 billion, when you roll this out, it corresponds to $100 million incremental sales and $60-70 million of incremental profit. So the value of moving from this idea, it is not a small benefit, or it's not just speed of making decisions. There's an incremental and incredible financial value that is delivered through these systems. So this is a very recent case study. So I wanted to share this with you guys. I'm happy to, I'll add just one more thing. The nice thing about AI decisioning relative to rule-based or planner-driven systems is that actually now with the development of new capabilities in Gen AI, we can actually move very fast in Gen AI space as well, because we can make recommendations. Our systems can make recommendations because they don't need to ask planner what their opinion is about this. So they can actually make recommendations on the same domain very quickly. So that's actually a space that we're moving very fast as a result of the philosophy and the math underneath these systems. I'm going to hand it over next to John.
All right. Well, thank you. And David, I don't think you could have teed me up better. So I appreciate this opportunity. So, real quickly, for you guys who don't know Academy, we are a leading sports outdoor retailer. We operate with 298 stores in 18 states with 3 distribution centers. $6.2 billion company, founded in 1938, which we went public in 2020. And so, if you want to go to the next slide here, I'll get into our, we basically we started our journey with Invent in 2018, and prior to that, we just came off a large ERP implementation. We are building a foundation for optimization tools that we could layer on a new ERP, and we were doing that. However, it had many challenges, and we really couldn't get the performance that we were really promised out of that.
You're on mute, John.
John,
John,
I can't unmute you actually.
Now you're up. You're back and forth, John.
Am
Now
I
you're good.
now?
You're good now.
You did hear me prior to that, correct?
Yeah.
Okay. So, we had constant challenges with our existing systems and the operational groups that manage them. I think there's really, we set on a journey really to improve in stocks. I think, Deborah, you're really talking about, what people were faced with in today's world with trying to plagued with in stocks and out of stock, or I'm sorry, out of stocks, and how to really move that needle. We set out to do that in 2018. When we started this process, we really were focusing on a lot of the tertiary optimization tools, things like price optimization and size optimization, assortment optimization. And what I really appreciated from Gurhan and his team, when we sat down and talked about our business challenges, they really focused us back to really fulfillment and replenishment optimization. Because if we couldn't execute right at that level, optimizing in front of upstream from that was really just a futile exercise. And so I think they helped navigate us through our business challenge to really help us to identify where we should start. And so, we started our journey in 2018. What Gurhan was talking about, which was different from other, software providers that we were looking at, is that they were going to help build a business case with our data, with a test and simulations. And so we started off basically giving them our data. They did a hindsight simulation that really compared our existing replenishment, forecasting replenishment system to what they would have done over a course of a year. And the results were pretty staggering. I mean, it was hard to believe that we had that much opportunity. And so, based off of that simulation, we progressed and started doing a pilot test for 50 stores in 13 categories, an A/B test. And what you see here is the results of that A/B test. We saw in-stock improvements of 1.9%, improved lost sales by 2.5%, revenue impact of 4.2%. The margin improvement on that piece was misprint. It was 380 basis points for that A/B test. But what that did is gave us confidence really to continue that rollout in a quick fashion. So from June of 2018 to January of 2020, we basically rolled out Invent through basically 50 categories across all items of those 50 categories, roughly about 20% of our assortment. And really saw results. Our challenge was to provide a business impact in that 6 months, which is extremely hard to do with any type of software implementation that we'd previously been on. But I would say that there's 3 key benefits that we saw and differentiators that we saw from Invent. And obviously it was that ability to test and simulate. Not only do they do that on the implementation side, but really through continuous improvement after implementation. They allow us to simulate different business strategies and scenarios. Is it better for us to cross-stock this item versus warehouse stock and replenish from warehouse stock? How do we how does our new store presentation levels, how does that impact essentially the larger picture? The second differentiator we saw is that it really streamlined our organization. With those traditional tools, we actually had silos of like replenishment analysts, forecast analysts, merchandise planners. And frankly, while everybody's trying to tactically execute, within their silo, trying to bring those teams together was a very difficult thing to do to solve business challenges. And what did the forecaster need to do? What did the replenishment analyst need to do? But this solution brings those teams together, removes a lot of tactical execution, allows them to really focus on business strategy changes to that, and allows them to simulate, see results, and then take quick action. We did that through what we call a hub team, and we can talk more about that if we need to. I think the third differentiator point was it's just extremely flexible. It's highly adaptable. It allows for continuous improvement over time. I'll give a few examples here. After go live, we had a desire to increase our cross-dock and flow through from our DC. And what we did is Invent helped us with a solution that allowed us to run basically replenishment upon receipt of purchase orders and cross-dock that based off of our replenishment math, right? Versus pre-allocating those with very manual allocation type of methodologies. We were able to increase our cross-dock percent from like 10 to 15% up to 25-30%, where we're seeing some significant improvement there. Our first year, we cross-docked to roughly about 10 million units with that solution. Another example of that flexibility is we try to progress to long life cycle items. These were things like we have a import and private label business with long lead times, 9 to 12 months of lead time there. And we are manually ordering that, doing planned purchase orders. We started rolling those onto Invent ordering processes. And what we're seeing here, and these are high volume, large programs. And we started seeing maximizing essentially like our color profiles across these particular types of programs, filling in, maximizing our in-stock rate across that. In a challenged environment that we're in now, we're seeing essentially 15% improvement in that category, in that program, that we didn't think we actually had that type of opportunity. And there's multitude of other examples of this flexibility and adaptability, things that we've done with seasonal replenishment, life cycles that are 3 to 6 months. They helped us with digital capabilities, our BOPUS and ship to store programs, how we handle demand for those. We have a holiday that we're going through right now. Traditionally we would have been on an allocation model for holiday, as we had to build inventory prior to sales. We have a lot of categories like grills and bikes that require a lot of building of inventory and a lead time that is required for inventory to be at stores before the selling window. And what was great here is that we were able to move them off of the allocation models using Replen, but allow us to essentially build that inventory in the appropriate timeframes for those lead time requirements. It also helped us with the constraints of our DC, because they couldn't process all the goods at the appropriate time if we did it just in time. They also did things like phantom inventory detection, helping us improve our identify and improve our inventory accuracy of items. So numerous things that they were able to do with their system here. But as you can see from the results here, over from FY20 to 23, We continued those improvements. We went from a $4.8 billion company to a $6.2 billion company. In that time frame, we went public. Our gross margin expanded at 420 basis points. We improved turn. Just in that pilot alone for 2019, we drove a $12 million in profit just in this pilot example here. If we look at other
in 2 months, right?
In that basically that 6 months of introduction when Invent hit the ground to the completion of our pilot. So, but if you look at other KPIs, our percent sales on replenishment in 2018, we only had about 38% of our goods revenue on replenishment models. Quickly after that pilot, we went to about 54%. Today we're at 70%. So our operational KPIs, our in-stock improved. We went from 92 to 95% on those replenishment items. Clearance percent to total, I think, as David, you were talking about, we reduced our clearance, by 200 basis points, while also, improving the margin of that clearance by another 400 basis points. I think the big one here, though, is if you look at the inventory, the average inventory, we were able to do all of that without actually increasing inventory. We've grown 40 stores. The inventory that we managed in 2019 versus today is roughly the same. 1 billion in inventory, we're at 1.1 billion here. So if you look at it like an average per store basis, we increased in stock, we improved that margin, doing it on 6% less inventory per store. So a lot of good improvements here. I could keep talking for about this for probably the next hour, but what I want to do is kind of open it up to questions for you guys. So if I could answer anything specifically that you might have regarding the Academy journey and how Invent helped, I'll be more than happy to kind of open it up to those questions. Deborah, if you feel that's our next.
Yep, I think we've got time for 1 or 2 questions. And I know from talking to some of you, Eric Quaid, I don't know if you had a question. Oh, Ravi, let me let you jump in. So we're sadly over time. So Gurhan and myself will be at NRF on Tuesday at 10:15 a.m. on the 3rd floor, and would love to see you there. And Gurhan, I think there's a lot of people who want to continue this conversation, so we'll have to figure that out. John, I found your takeaways and the way you describe things to be incredibly helpful. Really helped me visualize. So thank you so much, and thanks everyone for joining us. And we'll get you all the details on some of the AI Council events at NRF. We look forward to seeing everybody there. Take care. Thanks. Happy holidays.
You too.
Thank you.
Bye.